Hello, everybody, and welcome to the 65th edition of LM's Weekly Wrap, our weekly program to cover the market related developments. I think this week has been a kind of a testing times for the market post the Federal Reserve commentary, and we've seen a jump in the crude oil prices, the dollar index moving up, etc., and various other developments having their repercussions on the domestic markets. The domestic markets, in a way, are at crossroads at this point of time, waiting for crucial quarterly commentaries which are expected in the first week of October and the start of the earnings season. To explain more about the markets, we have with us Jash. Jash, welcome to the show and kindly take us ahead on the international as well as the domestic market developments, which will be followed by the sectoral outlook from my side.
Thank you, sir. Just a disclaimer that we are shooting mid-market hours today for some reason, and the closing might be different than what we comment today. So I'll start with the global markets. As sir said, after the Fed Reserve commentary, the market has become slightly jittery, and we have to wait and watch. I'll go to the crude oil prices. Yesterday, the crude oil was at $97 a barrel, which is high and which is extremely concerning for markets like India, as we have big imports that we do, and that caused the market to go down. Yesterday and today, it has been slightly resilient, but we need to wait on what it closes. Also, yesterday there was the expiry week, so I think the index did take a beating. The markets are at a very crucial level. They might bounce back or go down. The trend will be set in the coming days. As sir said, we need to watch out for the commentary that has to be the commentary of the earnings season that will come in the coming weeks. After the crude oil prices, we come to the dollar index. The dollar index hit a high of $107, and that has come down to $103-4 right now, but that is also cooling off. So that is why maybe we can see the market being slightly resilient today. The mid caps have started coming up today, but there is still a few hours left for the market to shut. So we need to wait on where the market closes. We saw the start of festive season, the Ganesh Chaturthi, the Lord Ganesha's festival. It was anticipated that it's going to be a 50,000 crore expenditure on the festive season. So we need to wait for the numbers, which is a very high number, and that might spike some consumption-related themes. We are quite bullish over there, but more outlook on thematic investments will be taken over by Nirav sir. This sums up my commentary for domestic and international markets, and I would like to hand over to Nirav sir. Thank you.
Yeah. Thank you, Jash. So yes, a lot of things which are being anticipated. We are seeing a lot of action in different sectors, with different sectors trying to pull up the markets. And what has been happening in the market is that a few sectors, the stocks tend to run up, then they tend to give up their gains. So there's no follow-up buying which tends to happen. But again, there are pockets of strength in the market. There are certain pockets in the market which have really held up the markets, which have really protected the markets, and which are really going to propel the markets going forward. First of all, we start off with the auto sector. I think this sector has performed very well for itself, and to start off with Maruti, I think this has been one of the biggest gainers of this week, amongst the top 5 gainers in the week, as and when we talk and discuss. I think the share of SUVs has been in their portfolio has been very strong, and it's in line with what they were expecting. So Maruti continues to do very well today. Tata Motors has also been showing up very well in trade. M&M continues to be a slightly under the weather, but it has also been doing well overall. We've got 2 stocks which have performed very well. One is Eicher Motors, and we have Escorts Kubota. Escorts Kubota also this week it has crossed the crucial 3,300 level. So I think the auto has been quite well, and if auto does well, then naturally auto ancillaries can't be far behind. So we like stocks like Bharat Forge and a lot of other small cap auto ancillaries which have been supplying well, and on account of their electrical vehicle initiatives too. So I think auto continues to be in a good space. After that, we have banking. Banking has been under pressure. We've seen divergent trends over there. Three different divergent trends we have noticed. One is the PSU banks. I think the PSU banks, on account of the under ownership, have been doing very well. We have pointed that out also. The second is the private sector banks. Private sector banks have been under a lot of pressure. HDFC Bank especially has come under pressure. This was followed by ICICI Bank, which came under pressure, and then SBI too came under pressure. So I think banking has not been able to give the necessary support to the markets. But on the other hand, we have NBFCs which have been doing very well in trade. For example, today L&T Finance, Edelweiss, or the likes of Bajaj Finance, of course, which has been one of the biggest gainer of this week again, and we also have Aditya Birla Finance, etc. All these stocks have been doing quite well in trade. M&M Finance has been doing well in trade. So NBFC is doing well in trade, private sector banks under pressure, and PSU banks shining in trade. So this has been the trend as far as the banking is concerned. As far as capital goods is concerned, as we had pointed out last week also, that this sector is very much lagged by the FIIs. The FIIs are picking up a lot of stocks in this particular sector, whether it is a like of ABB, Siemens, or Thermax. We are seeing a lot of interest in water treatment firms like Praj Industries or Ion Exchange, Vatek, Wabag, etc. Apart from this, we have Elecon Engineering, Schneider, etc., which also tend to move up in trade. So I think capital goods space is being attracting a lot of attention. And apart from this, as we had pointed out, another sectoral favorite of the FIIs is the healthcare space. Healthcare space is attracting a lot of attention from the foreign institutional investors. After this, we have FMCG. The FMCG sector is trying to make a comeback, and we've seen a few stocks moving up in trade, whether it is Procter & Gamble, Hygiene and Healthcare, Kolpal, or Jyothi Laboratories. All these stocks have been attempting to make a comeback in the markets, but I think still there is some buying, and then it tends to fizzle out. So FMCG still wobbly at the moment. I think markets will wait for the quarterly updates to come from the likes of ITC or Marico and Dabur before deciding on the way forward for the FMCG sector. IT sector, similar trends. I think there was an upgrade by Morgan Stanley, but then after that has fizzled out in the markets. Markets still very circumspect and not quite sure about what is the path ahead for the IT sector. So again, the commentary will play a very crucial role going forward about the prospects of this sector. Pharma continues to do very well today as we speak in trade. I think there's been positive cues across the board. Stocks like Lupin or Sun Pharma, Dr. Reddy's, all are up about 3 to 4% in trade. We've seen a few corporate developments in Glenmark Pharma, etc. So overall, I think it's in a very positive space as far as the pharma sector is concerned. And even today, I think, or during this particular week, I think it's been a very rare combination of a few sectors which have really done well. I think pharma has done well, and along with that we have realty, which has done very well. So I think some very positive deals coming, announcements coming in from Godrej Properties or Century Textiles, and we have the stocks like Sobha, DLF, which are up in trade today. So we are seeing very positive cues in the realty space also. A few stocks which we like, of course, DLF, we also like Man Infra Construction, which has received an IOD for its prestigious redevelopment project recently. Now coming to the shining sector of this particular week, and that is the PSU space. I think as we had pointed out, there are breakup into 4 categories. One is the PSU banks, which we already discussed. The second is the defense stocks, which tend to go up every now and then, especially the shipbuilding stocks. They have done very well in trade. And as we talk today, these stocks continue to do well in trade. Railways is a theme which has been doing well, though I think now the focus is slightly shifting towards the execution part, fundraising, etc. for the expansion initiatives which have been undertaken by them. But I think the general PSUs have done very well in this week. If we look at the top two gainers of this week, then it's been Coal India and it's been NTPC. Coal India, which was recommended by us in our LM Weekender category at 234 to 35 levels, is close to 300 levels. I think just now it is at 295 levels, up 26% since the time we recommended it in the first week of August. So I think a very strong show by Coal India Limited, and not to be left far behind. I think NTPC is also close to the 52-week high and ready to move up in a very, very big way from these levels. Now, what has really changed with the PSUs is that PSUs are working on professionalizing them. There has been a lot of initiative. If we just glance through the annual reports of the various PSUs, then if you look at steel making units, for example, they are very clear that they have been totally sourcing 100% iron ore is coming from captive sources. And so there is a lot of rationalization, cost optimization strategies are being adopted. There's a lot of diversification. There is a lot of work on technological upgradation, etc. Likewise, if you take the case of NTPC, then they have been saying that they've procured record number of coal from their own captive sources. So a lot of things are in the offing. If you look at the companies like Coal India Limited, they have said that they are working on a lot of underground mining projects. They are working on modernization of their mines, modernization of their equipment, on complete surveillance of the activities which are happening at the mining sites using drones and advanced technology, etc. So in a way, what it is pointing out is the efficiency in the operations of the PSUs can make a world of difference in the time to come. So I think markets will be excited and in a wait and watch mode because of the sheer potential of the PSUs. If they are managed in a professional way, if they are run in a professional manner, then I think valuations can hit the roof. As we talk just now, we have MSTC, which is also moving up in trade because this company again is a company where all the e-auctions happen through MSTC. So this stock has also been moving up in trade. So a lot of excitement over there, and I think this has to translate into proper tangible results on paper to command premium valuations. A lot of other things to discuss, but I think time constraints will permit us no further. I think I hand over to Jash for the concluding remarks. Jash.
Thank you, sir, for the valuable input, and we'll see you all next week. Stay tuned for more updates on the same. Thank you.
Thank you.